Meantime, tech stocks rose sharply today on the news of that partial trade agreement. Semiconductor makers in particular may be feeling the biggest relief simply because of that sector's exposure to China. Josh Lipton has more.
Chip stocks move on trade headlines, and for good reason. China is an important end market for these companies. Qualcomm, Micron, Qorvo, Broadcom, and Texas Instruments all get roughly 40 to 60% of their revenues in China. China is also a vital linchpin in semi-supply chains. Today, the chips moved higher. The SMH, an ETF that tracks the chips, has now surged more than 40% this year, on track for its best year in a decade. Beyond trade headlines, semis have moved higher on what analysts say are improving fundamentals, specifically that smartphone shipments have been better than feared and that a recovery in the data center business, they say, looks likely in the fourth quarter. Of course, there are risks for chip investors too. Do those improving fundamentals actually hold up? And big questions remain. There had been talk that the Trump administration planned to allow the sale of some supplies to Huawei, a Chinese tech giant that buys a lot of semiconductor components from U.S. companies. But administration officials saying they are not dealing with Huawei at this time. For Nightly Business Report, I'm Josh Lipton, San Francisco.